All right, welcome to our daily Solo 401k webinar and Q&A session with my Solo 401k Financial. We're just verifying the audio. We're here to help you stop overpaying taxes and start building real retirement wealth. Today's topic is from $7,000 to $70,000. Supercharge your Fidelity Roth IRA in 2025 with a mega backdoor Roth Solo 401k. This is your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's first lay the foundation with what is a solo 401k and then what is a mega backdoor Roth solo 401k. So a solo 401k is a retirement plan specifically for self-employed individuals with no non-owner, non-spouse, full-time W-2 employees. So in order to be eligible, you need to be reporting earned self-employment income on your taxes, such as income reported on Schedule C. In the case of a business, taxed as a sole proprietorship, could be a single member LLC, taxed as a sole proprietorship, or just someone that doesn't have a formal legal entity. Income reported on a W-2 in the case of a business that is taxed as an S Corp or a C Corp, or income reported on line 14 of your K-1 in the case of a business that is taxed as a partnership. So if you have that earned self-employment income with no W-2 employees working for any business owned by you or a spouse, if any, you're eligible to set up a solo 401k. Now, there are, of course, vanilla basic solo 401k plans that are offered by certain providers. But if you set up a plan, if you're eligible to set up a solo 401k plan, then you could set up a fully featured solo 401k plan such as the one offered by my Solo 401k Financial, that comes with more advanced features, such as the ability to make mega backdoor Roth Solo 401k contributions. So that leads into, okay, what is a mega backdoor Roth Solo 401k contribution? So that is a type of contribution, specifically a voluntary after-tax contribution, where you could take advantage of the higher voluntary after-tax contribution limits, which would allow someone to contribute, for example, for 2025, up to $70,000 or even more if you're age 50 or older, where those funds end up in a Roth solo 401k or a Roth IRA. But just like any type of Roth account, you have that potential for tax-free growth. And that is 10 times how much one could contribute to a Roth IRA, because the Roth IRA limits, for example, for 2025, for someone that's under 50 years of age, is $7,000 as opposed to 70,000, which is the limit for a solo 401k. So the key is to be eligible and then find a provider that supports the mega backdoor Roth solo 401k contributions, such as my Solo 401k Financial. So specifically, when you're making that mega backdoor Roth solo 401k contribution, it's a two-step process. You're first making a voluntary after-tax contribution where the funds are deposited into a separate voluntary after-tax account before they're moved to either a Roth solo 401k or a Roth IRA. So one needs to find a provider that offers a plan that allows for both voluntary after-tax solo 401k contributions and in-service distributions. Now, that's the minimum. You would also want to work with a provider that has experience in helping clients through the required steps. So, for example, we help our clients open up accounts at the bank or brokerage of choice. And if you're making a mega backdoor Roth solo 401k contribution, as we learned, you need to make a separate voluntary after-tax contribution, which means you need to have a separate voluntary after-tax account. And we're hands-on in helping our customers open up accounts at the bank or brokerage of choice, including those separate sub-accounts. In addition, even though the first step, when you make that voluntary after-tax contribution, even though the after-tax contribution itself is not reportable on the personal or the business tax return, or even on the W-2, in the case of a business that's taxed as an S Corp or a C Corp, even though the contribution is not reportable, the subsequent transfer from the voluntary after-tax account, either to a Roth Solo 401k or a Roth IRA, that is reportable on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. Customers just have to let us know about that transfer in a timely fashion. And they can easily do that because we have a form on our website that customers use 24/7 to provide us that information we need so we can add their plan to the queue to prepare the 1099-R. So how do I convert from after tax to Roth? Well, it can be transferred by check. It can be transferred electronically. It can go from your bank account or your brokerage account for the after-tax solo 401k contributions to your bank or brokerage account for Roth solo 401k funds, or even transferred from the after-tax solo 401k account to a Roth IRA. Now, the most popular brokerage firm where we are helping customers open up accounts is Fidelity. So the specific process to be able to supercharge your Fidelity Roth IRA with up to $70,000, for example, for 2025, would be to first, step one, open up a voluntary after-tax brokerage account at Fidelity for your voluntary after-tax solo 401k funds. And we help our customers do that, make the contribution, and we're educating our customers every day in terms of those contribution limits and the deadlines, et cetera. Once the funds clear, you can immediately move those funds from the voluntary after-tax account to either a Roth Solo 401k or a Roth IRA. Could be a Roth IRA at Fidelity. So that's step two, convert to Roth. Step three is report the conversion. So we have a form on our website that customers use. There's one form if you're moving the funds from the after-tax Solo 401k account to a Roth Solo 401k, and then another form to move the funds or to provide us the information that's needed to report the 1099-R, to report the transfer on a 1099-R. So there's another form that customers use to provide us that information that's needed to prepare the 1099-R if they're moving funds from the voluntary after-tax Solo 401k account out of the plan to a Roth IRA. And you can find those forms easily at my solo401k.net/forms. Now, while there is a deadline to make the contribution, right? That's that first step to deposit the funds into the voluntary after-tax account. There is a deadline to make the voluntary after-tax Solo 401k contributions. There is no deadline to convert the funds from the after-tax account to a Roth IRA. Now, most customers will move the funds quickly because they want to start accumulating gains. They want to start investing those funds, and they want to start accumulating those gains on a potentially tax-free basis, in which case they would first need to move the funds from the after-tax account to the Roth account, either the Roth Solo 401k or a Roth IRA. So that subsequent transfer, again, is reported on a 1099-R. Again, we have a form on our website the customers use to provide us that information, and it's going to be reportable for the year of the transfer. So the deadline to make those voluntary after-tax contributions is the business tax return deadline, including any timely filed extension. So for example, if you set up a plan here in 2025, you would preserve the ability to make all types of contributions for 2025 until your business tax return deadline, including any timely filed extension in 2026. So for example, if your business is taxed as a sole proprietorship, where you're reporting your earned self-employment income on Schedule C of your 1040, that means your contribution deadline is really the 1040 deadline. So if a timely extension is filed for your 2025 1040, such that the 1040 deadline is now October 15th of 2026 for 2025 tax return, that means you have until October 15th of next year to make that voluntary after-tax contribution, which of course means you're not going to be moving the funds from the after-tax account to the Roth account, either the Roth Solo 401k or the Roth IRA, until 2026. So even though the contribution is made for 2025, since the funds didn't move to the Roth account until 2026, it would not be reported until 2026. So it would be reported on a 2026 1099-R. And here's a couple of good visuals of how the account structure might look. So here's an example where there's one plan, one participant, and they have three different accounts. One for pre-tax solo 401k funds, a second for Roth solo 401k funds, and then a third for voluntary after-tax solo 401k funds. Here's an example where there's two participants. Let's say it's a husband and wife, both working in the business, both participating in the solo 401k. In that case, there would be one plan, but six different sub-accounts, pre-tax, Roth, and after-tax for each. And then finally here we have an example where someone is moving the after-tax funds out of the solo 401k to a Roth IRA, in which case they may just have two accounts for their solo 401k, maybe one for pre-tax and a second for after-tax. Then the funds are moved from the after-tax account out of the plan to their Roth IRA, such as a Roth IRA at Fidelity. Okay, wonderful. Now we're going to turn to the questions. Thank you so much for bringing the good questions. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement, as we do go live every day. So if you subscribe, you get notifications, you can come and ask questions or hear the content that we're coming to share. So now let's go through the questions that have been chatted up. Thank you so much for taking the time to chat up some questions. Does Charles Schwab Roth IRA allow the mega backdoor? Most definitely. So instead of having the accounts for your solo 401k at Fidelity, you could certainly have the accounts at Charles Schwab. Charles Schwab is the second most popular option. So with Charles Schwab, there would be a free brokerage account where we would prepare the paperwork, we would pre-fill it to open for your solo 401k. There'd be a dedicated account for those voluntary after-tax solo 401k funds. Then the funds could be moved out of the voluntary after-tax solo 401k account to a Roth IRA, including a pre-existing Roth IRA that you already have at Schwab. I just converted my LLC into an S Corp. We have 2 employees, but we are not full-time. We are W-2'd, however, would we be eligible for the mega backdoor Roth? Well, if the 2 employees are the owners of the company and or their spouse, then yes, you would be eligible. But if it's a non-owner, non-spouse, full-time W-2 employee, where the definition of full-time is someone that either works 1,000 hours a year with a year of service or 500 hours a year for 2 consecutive years. So if someone's working on a full-time basis under that definition, then that would prevent the business from being able to set up a solo 401k, which means you'd have to set up a full-time employer plan. And it's very rare to find a full-time employer plan that's going to allow you to make mega backdoor Roth contributions, at least without violating the testing requirements. But if you're self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any, then you would be eligible to set up a solo 401k. You would just need to set up a solo 401k through a provider like us, like my Solo 401k Financial, that offers a solo 401k plan that supports the mega backdoor Roth. Do you help clients open the checkbook in Charles Schwab? We most certainly do. So of course, we have clients that open up bank accounts, and those are checking accounts that come with a checkbook associated with the account for their solo 401k. We also help clients open up accounts at the brokerage of choice, Fidelity and Schwab being the most popular brokerage options. And as a matter of fact, both Fidelity and Schwab do provide checkbook access. So once the account is open, the most straightforward approach is just to send a secure message to either Fidelity or Schwab and ask them to issue a checkbook for the account. Is there a link for the slide? Well, we posted great questions. We posted a blog that goes through this content. It's not the slides per se, but let me get a link to the blog. Thank you for your good question. I see. Thank you for sharing that feedback. Okay, that's great information. So push the funds where you go to your bank and have your external bank send the funds to Fidelity. That's great feedback. Thank you so much for taking the time to share this. Yes, it's certainly possible to do the mega backdoor Roth every year, obviously subject to the contribution limits, the deadlines, having to earn self-employment income to justify the contribution, etc. But it's not just a one-time event. So it depends on your age. It depends on your W-2 wages that you receive from the self-employed business, taxes and S corp. Depends on whether or not you make contributions to another plan, like a day job plan, in terms of whether you're also trying to do the catch up, for example. But let's assume that someone has, let's assume they're under 50 years of age. They don't contribute to another plan, like a day job plan, and their sole goal is to make mega backdoor Roth contributions. So they could simply skip the employee contribution, skip the employer contribution, and just simply make voluntary after-tax contributions where they could contribute 100% of their W-2 wages from their self-employed business, taxed as a C corp, up to $70,000. So if it's two employees, husband and wife, each person makes at least 70,000. Each person doesn't make contributions to another plan like a day job plan, and they're only making voluntary after-tax contributions, then each person could contribute $70,000 as a voluntary after-tax contribution, and then transfer the funds out of the after-tax solo 401k account either to a Roth solo 401k or a Roth IRA. So that's $140,000 in total in that example between husband and wife for 2025. So if there are no gains that accrued in the voluntary after-tax account, and that therefore no gains are transferred to the Roth account, then all the funds are after-tax funds, and it is reportable, but there's no taxable portion. Now, if there had been some gains that accrued in the after-tax account, and then those gains are transferred to the Roth account along with the basis, along with the contribution amount, then the gains portion would be taxable for the year of the transfer. Yes, our plan most certainly does support the checkbook functionality. So we are providing the plan that allows our customers to do what they want to do, whether it's invest in equities, crypto, private funds, special SPVs, or take a loan, or make mega backdoor Roth contributions, etc. So these advanced features, then customers use our plan and open up accounts at the bank or brokerage of choice. So the checkbook is really provided by the account provider. So that could be a bank, that could be a brokerage. And as we mentioned up above, Fidelity and Schwab, which happen to be the most popular brokerage account options for our clients, they do provide a checkbook associated with the account. Great questions. Is the limit to 25% of W-2 income for mega contributions for profit sharing? So the 25% contribution limit that applies to a self-employed business that's taxed as an S corp or a C corp, that limit applies to the employer contribution limit, which historically is a pre-tax contribution. So if someone is looking to maximize mega backdoor Roth solo 401k contributions, they would make a voluntary after-tax contribution. So the voluntary after-tax contribution limit is not a percentage. It's 100%. So you can contribute 100% of the W-2 wages from the S Corp or the C Corp, the self-employed business, dollar for dollar, up to $70,000 for 2025, assuming that the individual doesn't make any other contributions to the solo 401k and doesn't also make, is not making contributions to a 403b, either by the person or on the person's behalf. For example, if they have a day job where they have a 403b through their day job. So if there's no 403b contributions and no other contributions to the solo 401k, they can contribute 100% of their W-2 wages from their self-employed business, taxed as an S Corp or a C Corp, dollar for dollar, up to $70,000. Great questions. Thank you so much for the great participation. We certainly appreciate it. We'll give you a moment to see if there's any more questions. In the meantime, we'll just highlight that we have the largest community of solopreneurs, self-employed individuals around this solo 401k topic. We've got over 30,000 members, which means that we have vibrant forums. We have a catalog. We have a library of videos and webinars on our community, which is totally free to join. You can join quickly and easily at mysolo401k.net/my community. So we totally invite you to join. All are welcome. It's totally free. So please don't hesitate to do that. All right, we've got a few more questions that trickled in. Thanks for the additional questions. What day job 401k contributions, or would day job 401k contributions be netted off 1-to-1 from the $70,000 per person cap on voluntary contributions? The answer is no, if we're talking about a day job 401k plan. So the employee contributions, for example, the $23,500 cap, that applies across all the plans that the employee participates in. So if they make $23,500 to a day job plan, they're not going to be able to make any more employee contributions to the solo 401k. But the voluntary after-tax contribution limit is higher, and it's also not reduced. So those day job 401k plans, day job 401k contributions do not reduce your ability to make voluntary after-tax solo 401k contributions. The only exception to that general rule is the 403b exception. So contributions to the 403b, whether by the employee or by the employer, are aggregated and do reduce how much you can contribute to the solo 401k. So if you have your 401k plan at Betterment and there are no non-owner, non-spouse, full-time W-2 employees, you could certainly upgrade your plan to our plan to take advantage of the service and features we offer, including the ability to make mega backdoor Roth contributions, the support, right? For example, we prepare the 5500 EZ as an optional free service. And so that process is referred to as a restatement. So you'll see, for example, on our online application, if you decided to proceed, that we ask if you already have an existing plan. So you would say yes, 401k at Betterment, and then list the original effective date, which you can find on the adoption agreement, or if you just send a secure message to Betterment, they should be able to dig it up for you. Thank you so much for the good questions. Once I'm ready to move money from my retirement Roth 401k to Schwab or Fidelity, how do I reach someone at my solo 401k to do that? So, for example, you could send you're welcome to call 1-800-489-7571, leave a voicemail, and we'll get back to you within 1 business day. You can email us at support@mysolo401k.net, or as part of the initial onboarding process, we send over a link to our next steps questionnaire. So you can submit that even if you previously signed up, and you could submit that to prompt us to prepare the paperwork to open up accounts at the bank or brokerage of choice, as well as guide you through the rollover process. So there's lots of ways to uh, contact us, and then we'd be happy, of course, to guide you through that process. Most definitely, just you're welcome to book a call at mysolo401k.net/book. So we are a boutique firm where all of our team members are highly experienced around these solo 401k topics. So our calls are scheduled, but you're welcome to, of course, book a phone call at mysolo401k.net/book. Thank you so much. Most definitely. So if someone has money in a former employer plan, let's say it's pre-tax money, you can certainly roll money from a former employer plan to the pre-tax solo 401k. And then our plan supports in-plan Roth rollovers, also known as in-plan Roth conversions, where the funds are moved from a pre-tax status to a Roth status. Now that transfer is going to be both taxable, because again, it's going from a pre-tax status to an after-tax status. It's taxable for the year of the transfer, but then going forward, the money is now in a Roth solo 401k. So you have that potential for tax-free growth. It's also reportable. And we handle the 1099R as an optional free service for our customers. Again, we just have an online form that customers use to provide us the information that we need to prepare the 1099R. You can access it quickly and easily at mysolo401k.net/forms. So voluntary after-tax solo 401k contributions, those are not reportable on the personal or business tax return. So for example, if someone sets up a plan here in 2025, if they filed a timely extension for their business tax return, their 2025 business tax return, and let's say their business is taxed as a sole proprietorship, so they report their earned self-employment income on their 1040, they would have until October 15th to make those voluntary after-tax contributions. And there's no need to amend the tax return because the contributions themselves are not reported on the tax return. So if you're trying to make a backdoor Roth IRA contribution, that's a common strategy if that individual is self-employed and therefore eligible to set up a solo 401k, self-employed with no non-owner, non-spouse, full-time W-2 employees, they will move the pre-tax money from their IRA accounts over to the pre-tax solo 401k to effectively have a clean backdoor Roth IRA contribution where they're only making non-deductible contributions to their IRA, which are then moved over to the Roth IRA because there's no other pre-tax funds in any of their IRAs because that has been moved over to the or to the pre-tax solo 401k. They can make that clean backdoor Roth IRA contribution. All right, well, that takes us to the end of today's session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. Thank you so much.